Good morning. This is Mayor Valensky with Driving Markets. First of all, welcome to all the new viewers and new listeners. And I just want to give you a quick recap on what is the idea of driving markets. The idea is to give you a quick 5-minute, 6-minute wrap on financial markets, including shares, stocks, dividends, bonds, foreign exchange, and of course, cryptos, and anything else I can give light to or give you a bit of education or direction. That is the idea of driving markets. Okay, so let's just have a quick recap of where we're at. The markets in the US and across Europe and the UK is closed slightly up. Remember, I mentioned last week that the markets at the moment are range bound. Range bound means that they get to a certain level at the top and then they float back down. When they get down to the low level, then they float back up. So remember, in the first quarter, there was a lot of activity going on in financial markets. You had, of course, the interest rate issue. You've got inflation, massive inflation. Then came along Russia in February. Russia invading Ukraine. You've got geopolitical issues. All of that had a big impact on markets and increased volatility and sent the price of oil sky high. That was the first quarter, and it looked like the markets have sort of absorbed that particular frightening, worrying, nervous news, and they've taken it on board and said, okay, so we're going to have interest rate rises. We're going to have a geopolitical war that's going on now for 38 days. We're going to have oil prices that have risen. That's all been taken into account, and in my opinion, it's already priced into the market. However, what's going to happen now in the next quarter from the 1st of April onwards? It all depends what happens regarding, well, it's quite vibrating, isn't it? It all depends what happens with the geopolitical situation and, oh, it's moving a lot. Start again. It all depends what happens with the geopolitical situation and interest rates. So looking at inflation is probably going to rise a lot higher than anticipated by the central banks and also by Wall Street. So I reckon inflation is going to run around about 15 to 18% by the end of the year. And in the moment, the central banks and Wall Street analysts have priced in inflation around about the 8%, 9%, far too low. We're going to have super high inflation over the next few months. Interest rates will be going higher and may even go higher in between the Fed meeting or the central bank meetings in Europe and the UK. Remember, there's a major problem there because the banks are fearful of raising interest rates too high in the short term, which will significantly damage the economy. The other thing I want to look at is cryptos. Look at Bitcoin. The Bitcoin volumes are pretty low, but yet Bitcoin is climbing higher. Bitcoin has much higher volumes when there is a high move or a low move. But yet there seems to be a rising trend on Bitcoin, and yet Bitcoin is a risk investment. That means that people who invest in Bitcoin are looking for a high return, but are willing to take the risk because it is very, very volatile and moves quickly. So it does contradict overall market sentiment because shares are running slightly at a lower, trending downwards, and the investors don't seem to have much appetite for shares, and yet they do have appetite for Bitcoin. So that seems to be a contradiction. Why is Bitcoin moving higher? Simply because, in my opinion, there is a rarity of Bitcoin. There's only 21 million coins in circulation, and that is the maximum that can get to. And therefore, the scarcity will make it more volatile and make it more attractive as a risk on investment. What else have you got? You've got also bonds. Bonds yield is slightly down on Friday. However, the bond yield, the 2-year yield is higher again. 10-year yield once more. I would say to you that this is an indication of a bear market. So it keeps moving around. The 2-year yield is higher than the 10-year yield. That indicates a bear market, but must happen over a 90-day period. Be aware of that. The greenback, the dollar, is trending higher on expectations that interest rates will rise in the States. You've got a strong dollar. You've got weaker other currencies versus the dollar. The other currency that I would look at on the foreign exchange market is the pound. I believe the pound is oversold. It's just too low and needs to rise. So that is probably, I would say, in my opinion, a good investment or good trade going forward. Looking at the cable, which is pound dollar, I would expect it to be more in the region of 136, 137. in a swing trade, not a day trade, over the next 2 months, 3 months. Significant jump, but I do expect the pound to be high against the dollar in the next 3 months. The other interesting point came out. JP Morgan has removed Apple from its hot list. What is that? That is the most sought after shares. Why? Because they see a downtrend in cell phone purchase. So in other words, the cell phone purchase, the mobile market, the consumer will be, in JP Morgan's opinion, reducing their purchasing of iPhones and reducing the purchasing of Android. So they didn't downgrade Apple, but they took Apple off their favored list, which caused Apple shares to drop on Friday. Going forward, the trend, in my opinion, is down overall in the markets. I see interest rates going up and inflation going to 18%. Sounds negative. Many viewers are saying I'm really negative. I'm just giving my opinion. That's the idea of driving markets. You can contact me on Instagram, YouTube, you can do a LinkedIn, you can WhatsApp me, whatever you need. I'm more than happy to help. This is Meir Walensky with Driving Markets. Have a good day.